Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, chef, the father of six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, I'm doing good. How you doing, bro?
Always making it happen, big man. Trying to get my stuff together. You know what I mean? So
clean shaven, bro. Looking good today. You know what I'm saying?
Thank you, baby. Thank you. Guys, this is where we normally plug something to pay the bills. Now for our listeners, we only showcase products and services that we approve of or use in our own business. This time we're going to tell you about something of ours, specifically our Wheelbarrow Profits community. Papa G Funk, take it away.
Mr. J Love, we've been working hard at growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group of guys. What we're looking to do is want people to follow the proven framework that we've created: the buy right, the manage right, and the finance right. On Jake's shirt, we got the wheelbarrow, bro. Show them the wheelbarrow. Yeah.
Every time you come into my city,
we want to leverage our connections. We want education and mentorship as ways to take your business to the next level.
And Gino mentioned it's for the guys. Hey, it's for the gals too. We got some real, great sharks, some females in there that are kicking down doors. So don't forget about that. And if this is your first meeting, let's turn off the phones. Hey-o.
Dude, guys, gals, it's all interchangeable. You know what I'm saying? Just guys and gals are all the same thing, right, bro?
Hey, so guys, if you're interested in finding out more about how you can become a part of this amazing community, apply to work with us at jakeandgino.com/apply. Enough of that. Today's guest is Scott Maurer. Scott is the Director of Business Development at Advanta IRA. And today he's going to share with us how we can use self-directed IRAs to invest in multifamily properties. Guys, you want to find the money? Today, we're finding the money. So without further ado, Scott, welcome to the show.
Hey, Jake. Gino, great to be back on again. And I look forward to giving the listeners a good education on a little known area where you can actually find some good capital. A lot of people don't realize that IRAs, old 401k funds, can be used to invest in all kinds of real estate, including multifamily.
Hey, all multifamily all the time here. So tell us about your background a little bit again, and just how people can start to access this great source of capital.
Sure. My background, I've been with the company now over 12 years. I'm an attorney by degree, but I work primarily with business development here at Advanta IRA. What we do is we facilitate people who have money in an IRA, have money in an old 401k plan, be able to use that cash to invest in all types of alternative assets. And the most common thing we see people investing in is in real estate. So it's people buying single family homes, people buying real rehab properties, et cetera. But we also see a large number of people who raise capital using self-directed IRAs for a variety of purposes. And a lot of those underlying private placements are real estate projects. So people out there who are looking at getting into multifamily or getting into syndications where you're trying to raise a few $1 million, even a couple $100,000, IRAs can be a source. Most people just don't know that that's even possible.
So Scott, how did you get into Advanta?
Like I said, I was an attorney by degree. I met our owner for Advanta is also an attorney. Met up with Jack, and then obviously we were looking to grow. He was looking to grow the company at the time, so got hooked up with him. Got started with the company again back in 2006. Was the height of the real estate market. That's when we started to really start to take off. I joined the team, and we've kind of just kept growing ever since. I was the third or fourth person hired. We're up to 24 people now. So
nice. So when did you first hear about self-directed IRAs, and what attracted you to them?
Well, it's actually, it was like I said, met Jack, and that's really the first time I'd heard about it. So I started off with the company, really learning as I went. I'd heard about IRAs. I knew what 401ks were, but I had no idea that, like most people, I had no idea that it was possible to use retirement funds to invest in real estate or other assets. Everybody thinks, I got to stick to mutual funds or stocks or bonds. That's my only option. So that was news to me when I first started too. So when I started in 2006, I didn't know much about self-direction either. So I was in the same boat as a lot of people out there. and learned as I went along, and obviously learning a lot from other people as well.
So how much do you know how much money back then was in our retirement accounts, and do you know what the number is today?
I know that there's over 7 trillion now. It was probably obviously a little bit less back when we started now, but there's 7 trillion in over 7 trillion in IRAs. There's a close to 24 trillion when you consider 401ks, 403bs, all the other types of employer-sponsored plans as well. So obviously that number fluctuates a little bit here to there, but the more and more people that are saving, the more and more it's out there. And the crazy stat is, even whether it's 7 trillion, 8 trillion, 9 trillion, whatever the amount might be in IRAs, it's less than 5% of that money is even in a self-directed capacity where you could use that money to invest in real estate. So that means 95% of people out there probably have no idea that this is even possible. And their money's just sitting in a bank, sitting in a brokerage firm, and they're not really hip to whatever other things they can invest in.
Mm-hmm. Can you give us like a big overview of what self-directed IRAs are, why they were created, and I guess some of the advantages of them?
Sure. I mean, the self-directed IRA is actually, IRAs were created back in 1975 to address a few issues with 401ks and pensions at that time.
Mm-hmm.
Since that time, you've always been allowed to invest in alternative assets. And that's what we deal in again here at Advanta. What a self-directed IRA is being able to take that money out of an IRA account and invest it into something you can control. Again, and so it's been allowed since 1975 that you could invest your IRA into real estate. You could invest it into private notes. You could invest it into private placements. But what happened is a lot of the brokerage firms who hold a lot of the 401ks and 403bs kind of have monopolized the market, and people just assume that's where their money has to be. So you've been allowed to do it since 1975. It really took off. Self-directed IRAs really took off more in the 2002, 2004 time. When real estate prices were going through the roof, everything was on an upward trend. People started looking for other sources to invest their, I want to buy more property. I need more money for my deals. They started looking around. That's when self-direction really kind of got a little bit more of a foothold and really has grown since then.
So what are the common ways that Advanta sees people investing in real estate with their IRAs?
I think for real estate, we see kind of two different avenues. You have the individual who has their IRA account, who wants to go buy their own rental property, go buy their own rehab project, maybe do some private lending for their IRA. And it's kind of, from their standpoint, that's how they look at their IRA, is simply investing on their own in real estate, whether again, tax liens or other, joint venturing. So you have individuals who really, their mindset is my IRA, I'm going to find my own little property and go from there. You have a second subset of people who are looking to be part of something bigger too. So you have people who are raising capital, who don't want a single family home. They want a multifamily property. They want a larger real estate development project. So those people are using their IRAs as a portion of a larger deal. They may be raising $5 million, and $1 million of that is IRA funds. But it's using it and networking and trying to find other people to help raise that capital.
And what do you typically see when someone is raising money from individuals? What portion do you think is coming from money in IRAs?
It's going to depend on each individual investment. But I would think, when the people who actually try to make self-directed IRAs a part of their portfolio or part of the investment strategy for their investors and put that out to their investors and make their investors know that this is possible, I would guess probably at least 20 to 25% of the funds they raise at that point would be IRAs. Now, obviously, you have a lot of people who don't know this is possible. It's zero. But for a lot of people who have found out that IRAs and old 401ks can be used, it's been extremely beneficial. Like I said, probably at least 20 to 25%. I've seen larger cases than that too.
What has your reaction been when you've asked people, or told people, do you know you can use IRA money to invest in real estate? Have you gotten some priceless reactions from that?
Yeah, we do. Certainly some people, they give you this dumbfounded look of, well, that's not possible. That can't be right. Kind of like almost like I'm selling snake oil or something like. But then you get the other reaction for the people who have been doing it, who've come to Advanta, who've made investments, and over the years, they come back to a class of ours. You run into them, and then you get the response of, "I'm so glad I found this," and I wish I'd found this sooner. So. Yeah, you get that reaction from the people who've been doing it that say, I wish I'd known about it sooner. And then, you get the reaction from other people. Usually it's positive. It's, hey, wow, I didn't know I could do this. This is fantastic. Every now and then you get the people that the minority of people, but still say, there's still something not right about this. But it's perfectly legal, perfectly allowed by the IRS.
I remember the first time I heard about it. It was back in 08, 09, and I was just doing a mentor class. I was coaching with somebody, and they said it, and I was like, I've been in finance my whole life. I never heard of that before. I was always, I was always in the financial markets, never heard of it before. And I was in that dumbfounded camp I was actually pleased. I'm like, wow, this is something really cool. So I'm assuming that when people find out, that's like, wow, that's untapped source of revenue. Because I think when people are trying to raise money, it's hard to get somebody's savings in their savings account, but it's a lot easier to raise money from somebody's IRA where it's out of sight, out of mind for the next 20 years. So it's an excellent, avenue to raise money. So the next question is, how can an individual use self-directed to raise capital for the real estate projects?
Yeah, I mean, again, it's as you're just saying, Gino, and I would agree wholeheartedly with what you just said. You're looking to raise capital, you're talking to investors, and you're finding people who are read your prospectus, or you give them the overview of what you're looking at doing, and they're interested. At that point, it's trying to figure out what capital do they have to use for the investment. Where are they going to be able to pull the money from? And I think, as you said, some people are more reluctant to pull from that savings account, from that rainy day fund, that they have that money sitting there in case of emergencies or a job loss, and they really don't want to touch or tie that money up. But you have your IRA, you have your 401k sitting there. You're not planning on that's usually the last resort somebody's going to touch in an emergency. So that money is kind of out of sight, out of mind. So for someone who's looking to raise capital, adding the IRA piece to, when you're pitching your investment to investors, it's just adding another option for someone to invest with you. So you might have somebody who loves your idea, sees the benefits that you're offering for your investment, but they don't want to part with their personal savings. They don't have any other resources. And they say, hey, your investment sounds great. I wish I had some money to invest. Using the IRA is going to help unlock a few more doors, basically, and open you up to some more capital. And maybe not only for that investor who the IRA ends up being their only option, and say, okay, great, now I can invest with you. You have maybe current investors who are already investing with you that would love to get those same types of returns in their IRA. You tell them about that. You've unlocked additional capital from people you were already working with. So it's not even about finding a new investor. It's showing your existing investors another way they can invest with you.
What types of prohibited transactions are there in self-directed IRAs that you can't invest in?
Yeah, there's only two investments you can't make in an IRA. You can't buy life insurance, and you can't buy collectibles. The other restriction you have is your IRA cannot, for instance, you can't buy a piece of real estate that you want to live in, that you want to lease out to certain family members. So you have to be careful with your IRA investing into deals at which you or a family member is going to benefit from. So when it comes to multifamily, I think there's some ways you could work it where your IRA can still be a part of the deal. In addition to other people's IRAs, it just really depends on how you're being paid from that same arrangement as well. But those are the only restrictions there. When you're dealing with third parties who want to invest in your real estate project, there's going to be no issues at all.
I like that. So why are IRAs a good source of capital? You got tax reasons and all that stuff. Can you give us an overview?
Yeah, I think there's a couple of components. I think one we've already touched on. It's a different source of revenue that people are, again, more likely possibly to use. Hey, if you're going to give me 7, 10, 15, 20% of my money over the next 5 years, this is money I'm not going to touch anyway. So the IRA is a good resource there because it's money that's often forgotten, and people sometimes are even looking for better returns. The other aspect is the gains that you get inside your IRA. As long as those gains are coming back into your IRA account, no tax consequence now. So if you're dealing with investors who have they're in a higher tax bracket now, the income from your investment returns coming back to them is going to stay tax deferred inside their IRA account, or possibly if they're using a Roth IRA, it's coming back to them ultimately completely tax free. And that's not a gimmick. People look at you crazy. Again, you get that bewildered reaction. If you're investing in a Roth IRA account, your Roth IRA, all of those gains are completely tax free to you forever. Now, traditional IRA is still great. It's tax deferred. Roth IRA is completely tax-free. So the people who are using IRAs, again, it's because it's a different source of capital for them. There's the tax deferral and tax savings. And there's also a third bucket. There are people out there whose IRA money and their 401k money is sitting in a money market right now because they're just not sure what's going to go on in the stock market. They see ups and downs. You have ups and downs in the stock market. People are unsure about geopolitical concerns even. It's things that happen across the world that affect your 401k plan you had no control over. They're looking for other options, other places to put that money. And if they know you and they know the kind of work you do, that can be another reason just to get their money out of the roller coaster and something more, conservative for you.
Mr. Stenziano, we both don't like 401ks for several reasons, right? But I think it's an appropriate time to talk about them real quick. The problem that I have with 401ks is usually they have limited options, right? That's the first thing. The second thing is the fees are onerous. I mean, they talk about these returns and the fees are onerous. Nobody ever talks about that. And the third thing is there's really no control. You have no control of your money there. So Scott, do you see any negatives with the traditional 401k as opposed to a self-directed IRA?
Well, certainly the people who have 401ks, the only thing that they have to be careful is if they're in a current 401k plan, they may not have the ability to move that money out of a plan for an employer they're still working with. But those people who are in old 401k plans or old 403bs where you left your employer, one of the big negatives with those plans is you're very limited in what you can invest in. So, I know, for instance, the 401k that I've been involved in the past was you could choose from 10 or 15 different mutual funds. So you had control under that aspect, but that's what you were limited to. And so I think with a lot of things you're going to see in 401ks, that's the case. Even IRAs with other firms, same kind of situation. It's just they're charging you other fees and they're limiting you to what they sell. And that's definitely a huge negative, I think, when people are investing in those avenues, is not having the freedom, not having the control, and very possibly getting nicked for a lot more in fees than they think they are.
There's a lot of fees. Like you have the mutual funds where they're usually investing in load mutual funds. So there's fees from there. Then you have the plan administrator who's administrating fees to run the thing. So your 8% is not always that net 8%. And, Tony Robbins talks about in his book of Wealth, he really talks about the amount of fees that can really negate those gains over the 20, 30-year lifespan that you're thinking. You're not really compounding that. So I think people really take a deep dive and see what's going on inside your 401k.
Yeah, and I would say kind of an anecdotal story. I tell the story a lot because I think it's a good illustration of that point. We had a potential investor once come to a seminar we were putting on and looking at investing their IRA with us, and asked us what our fees were. And we told him, what our fees were to manage the account. And he goes, I think that seems high because I'm looking at my IRA statement here from my brokerage firm, and they're charging me $25 a year. It says right here, annual fee, $25. That's all I'm getting charged. Well, there was a broker in the room who like self-directed IRAs. And he said, well, let me see your statement for a second. He went through his statement and outline and said, here's a fee, there's a fee, there's a fee. And he ended up adding it up. It was over $1,000 in fees on a $100,000 account. So the guy was paying 1% in fees, but he was reading the one line that said $25 annual fee and thought that was it.
Everywhere a fee. This is going to get like a children's song here, right?
I like that. Scott, what successes have you seen for people using other people's IRA, and how are those investments usually set up?
Yeah, usually I would say for the most part, for the people who are raising capital, it comes in one of two ways. Either you're borrowing from somebody else in the form of a note or mortgage. So I could simply, my IRA could lend to a third party. That third party signs a promissory note or mortgage back to my IRA. That's certainly one aspect, a much kind of more simpler version. But for the people who are raising more large amounts of capital, typically are using an LLC, using an LLP, where they're kind of carving out a number of different membership units. So they might be raising 500,000, they might be raising 10 million. And they're soliciting people's IRAs to buy into that one particular, whatever amount they want to invest into to get shares. We've seen a number of real estate development companies. We've seen a couple of private equity firms too that just putting it out to their investors. We had an insurance company we work with that already had a large number of investors, and they were doing their second capital raise. They simply included a blurb about investing with your IRA account, sent it to their existing investors. They didn't even have to go out and find new people to work with. Just sent it out to their existing investors and said, hey, if you want to buy in, you want to buy more stock, you want to put some additional money with us, here's how you can use your IRA account. And they were able to raise, I think they raised around 50 to 60 million more in using IRAs. And we've certainly, again, seen that in the real estate development side, where just, again, making people aware that that's an option. It's not definitely, we don't preach that this is where all your capital raise needs to come from, but it's just giving you that other tool in your tool belt when you're talking to an investor to say, hey, if you like what I'm doing, I can get you this type of return. Here are the different ways you can place money with me. And again, the fact that you mentioned the IRA, most people don't even know that that's possible. Mm-hmm. So it's not that they're going to say no to it. So I didn't know I could use my IRA. I didn't know I could use my 401k to do this.
So Scott, I'm a new investor. I'm syndicating a deal. When should people approach you? When should they start setting up the groundwork to start talking about this? And how do they set up an account?
Yeah, I think it's typically, if you're looking to start a syndication, talk with us up front. We can kind of walk you through the process of what it looks like with an IRA account. If you're setting up a PPM, if you're getting that far along the road, you're getting a PPM. We work with people to make sure those PPMs get done, properly in the name of the IRA. But I think it's at the outset when you're getting started and starting to raise capital, even starting to have that idea. Give me a call to have that discussion on what does the process look like? What are the rules? We've given a lot of good information today, but there's some more details and nuts and bolts to go over in a call. But get up front, and so you make this part of your strategy all along. At least adding IRAs. So if you're doing some collateral, getting information out there, sending emails, we can help you put together an email, help you put together some wording. We can even do a private landing page for you and do some marketing pieces to help you at least advertise your investment to people and using their IRA account. So I think getting started up front, getting an IRA account open is easy. So we make the process as easy as possible for a new investor to open their account, move money, and ultimately make the investment. But for someone who's doing a syndication, looking to raise capital, get in touch with me as you're getting that process started, and we can kind of let you know how we can help you going forward.
I'm going to put a landing page at the bottom of the show notes just to show you how nice it looks. It's really seamless. It's almost like a white label thing and it's an easy step-by-step. They fill something out, they get in touch with Scott, and it's an awesome process. So I'll put our landing page at the bottom of the show notes. Okay.
Good. Yeah. We've had a lot of people enjoy using that. And I think have been very successful with, again, it's just for us, it's all about awareness. It's not about, selling the self-directed IRA. It's just making people aware. That's going to help you raise capital just by making people aware of that option.
What is the best retirement tip that you can give the listeners?
I think on an individual basis, put money in as early as you can and as often as you can into an IRA. I think the benefits that an IRA gives you is the tax deferral and being able to compound your money more quickly. So the quicker you get that money in, you have longer time that money is going to compound into it. That certainly is one thing. I think that's pretty common across all financial industries. Put money away if possible. But I think the other thing is certainly coming from the self-directed side is make sure you know what your options are. Again, a lot of people have their money with a 401k provider or an IRA company. They're not even looking at their statement. They have no idea what they're invested into. Take ownership of your ownership of your situation, your account. Do a review every so often. Make sure you know what's out there and get educated. That's what we do at Advanta IRA. And so I'm happy to come on your show to tell people what's out there. We try to provide as much education as possible. We do a lot of webinars and seminars to further that. So get educated, find out more about what you can do, and take control.
Mm-hmm.
Taking ownership for your future. Scott is in the make it happen zone right now. I love that. It's so true though, man. You gotta, no one's gonna do it for you. So if you want to, go out there flailing around and keep your fingers crossed and go ahead and do it, or take control and drive the ship. So.
Yeah, I would agree wholeheartedly. That's what our clients have done. The people that have come to us, like I said, going back to talk about that client who sees us a few years down the line, says, "Hey, I wish I'd done this sooner." It's because they took a step and said, "You know what? I am going to take control. I'm going to be responsible for my retirement account," and now they're reaping the benefits from doing so.
Well, to piggyback off the make it happen zone, then let's talk about you. What is your best habit for success? You're in there business development for a successful company. You're seeing entrepreneurs every day. What is something that you do that's led to your success?
I don't think it's any secret. I think a lot of the people share the same kind of advice, but in our company we have weekly meetings among certain staff members, and we have quarterly meetings and yearly meetings where we set goals at the beginning of the year. What do we want to? Where do we see this company being a year from now? And especially from my standpoint in business development, where do I see us being a year from now? And then each quarter setting specific goals, measurable, quantifiable goals, where you can actually put numbers to it to make sure you're achieving what you look to do. And we do that every quarter. We set basically different quarterly goals to further that yearly goal, and then meet on a weekly basis to keep ourselves accountable. And I think that's key thing is writing things down, and then having other people around that are going to help you, hold you accountable to what you said you're going to do. We use the term rocks. Like we set quarterly rocks.
Oh, we got an EOS guy in the house, Gino. That's what's going on right now.
Mm-hmm.
They got their weekly masterminds kicking. So, What about, do you have any success stories from clients that have invested that you can share with us? I just love to hear, some of the stuff that's going on there.
Yeah, I mean, there's been there's been a realtor that we know who started out, I think probably 10 years ago, bought a rental property, just bought one property in his account, got it renting, got that property renting, cash flowing, turned around and bought another one. I think he's up to 7 or 8 properties now, just cash flowing back in his IRA on a year, on a monthly basis. We have individuals who've done private lending. There's one individual in particular. He has gone and bought properties at auction, got the properties at a good deal, fixed them up, and then he's turned around and sold those properties back to people in his community he knows that aren't qualifying for traditional financing. He sold the properties to them and agreed to hold back the notes, basically do a seller finance deal.
I'm gonna fix your JOG out there, Gino.
Yeah, I like that.
Yeah, so for his IRA now holds a couple $1 million in private notes that are to good people that he qualified, good credit. They got a down payment on all of them. So that's been a good success story. Like I said, we've had on the private capital side companies that have made self-direction a part of their capital raising strategy, and gone from struggling to kind of meet their capital goal to hitting it much more quickly and raising a couple $1 million more in revenue just simply from making IRAs an option for their investors.
So from the investor standpoint, what does that process look like? I mean, I feel like we talked about if you're the guy that's actually going out there and raising, the money and things like that, just maybe a few little quick points on what it looks like for the actual investor.
Sure. For the actual investor, it's a pretty, we do our best to make it as simple as possible. It's for an individual investor, say I want to invest in a syndication. Their first step is setting up an account with us, filling out, some basically bank paperwork, for lack of a better term, to get an account opened and then to get money transferred from their current custodian. And that's where we come in and help tell them what steps they need to take to move money from their Schwab or their Fidelity or their Morgan Stanley account into Advanta. So we assist on that process. And then from there, it's working with the syndicator or the capital raiser, whatever investment paperwork they have. If they have a subscription agreement or they have an operating agreement, working with them to make sure that the IRA itself gets listed as the buyer on all the documents. So we will work with the individual client to get those documents prepared, and we will send all of those subscription documents to the IRA owner for them to review and for them to approve for us. So they are involved every step of the way, from when they get their account set up, helping getting the funds transferred in, and then from that standpoint, approving all of the investment paperwork in that process as well.
And you've been talking a lot about syndications, but what if, Gino and I set up a fund? Can they use this for funds as well?
Oh, absolutely. Yes. Yep.
Very cool.
It's again, we've seen people, I've seen 3 or 4 people use their IRAs together to go buy a property for $200,000. Everybody put in 50 grand. Seen something, a small deal like that, 2 situations where there's been large apartment complex companies that are raising, $10 million, and they create a fund and an IRA buys into $50,000 or $100,000 to get that small piece of the pie. So you can partner in really a deal in any size. If someone's buying a $60,000 condo to flip, but it's the husband's IRA has 30 grand, the wife's IRA has 30 grand. You can partner up in that small of a deal. So it's really scalable, whether it's you as your own account buying your own property, or you're looking to be part of 2, 3, 10, 100 different investors. It's all possible to do.
So large or small, Scott touches them all, right? Here we go.
Yeah, there you go.
Dude is on a roll today, my friend.
Hey, man.
You see what happens when you shave and you clean up, bro? You are rocking and rolling today, my friend.
I even got my brew going, man. I smell good. Yeah, it's a beautiful thing over here. So what about a book recommendation? I know we touched on EOS there a little minute ago. Anything else that you've read lately that is worth recommending?
I'm much more of a consumer of articles, not so much a book. So I read the Drudge Report every day to try to keep up with things in the world. As far as books, I'm trying to think of the last one I really read, to be honest with you.
We'll leave it at this. Must have read Wheelbarrow Profits. It did enough for him, and he's just moving on. So we'll leave it there. Scott, what's the best way listeners can get a hold of you?
Easiest way, one of 2 ways, either email or phone. My email is smaurer@advantaira.com. That's one way. Or just simply reach out on the phone, 800-425-0653, and my extension is 1123. You call that number, you're getting me directly, and I'll walk you through, answer your questions, again, if you're the syndicator, you're the private placement, and want to reach out to us, that's fine. If you're an individual saying, hey, I want this from my own IRA account, give me a call and I'll walk you through that process too.
Scott, I've been on a few of your webinars. I've done on some of your trainings. I've been on your website. There's some awesome resources for self-directed IRA. Do you have any other resources where you can point people towards to get more educated on the topic?
Yeah, I mean, it's like I said, I think our website, we have a good YouTube page. Mm-hmm. Google's a phenomenal tool, I think, to really get educated. You don't need to go spend, you don't need to go buy that $30,000 real estate course necessarily to get educated in a bunch of different areas. So I think using Google, there's great, just go to YouTube, type in self-directed IRAs. You're going to find a lot of good articles, a lot of good short videos, longer videos, to really find out and get that information that you need.
Jake, we forgot to mention that Scott's going to be at the live event in October 6th and 7th. So I think it's an opportunity for anybody who's thinking about doing self-directed IRAs to come and meet him face to face. It's always great. So if you're going to be investing $50,000 or $100,000 into somebody's deal and you're still unsure of it, the best thing to do is just to go meet Scott, talk about how it's going to work, how it'll affect your life. And I think it's just a great place to just
what a beautiful thing, Gino. I mean, we got these great guests on the show, and now we're taking the next level and providing an event where you can go up, shake Scott's hand, bring the pain, really get inside his brain, get to know him. I mean, this is beautiful, man. You're doing a great job, Mr. Barber. Wow, hats off to you, my friend. This is awesome.
You're looking good. I'm trying, my friend. I'm riding the coattails. I'm in the MIH zone right now, aren't I? So we're trying to make it happen too.
Dude, you are just stuck in it. It's like this red glowing bubble of goodness right now. You're stuck in the MIH zone. So, anyway, Scott, anything else today?
No, I mean, like I said, I'm looking forward to that event. I think again, it's always good, especially you guys are going to put together a great event, people to get information in so many different areas. Not only just obviously you can come talk to me about self-directed IRAs, but I'm sure there's people other areas of financing, valuation, structuring the deal. So I'm really looking forward to the event. That's where we meet a lot of people on a local level in our Tampa Bay and Atlanta areas at different real estate investment clubs and meetings. So I'm really looking forward to coming up in there in October.
Last plug for the event. Guys, we're going to juice you up. It's going to be a motivational event, but these are the events where shit gets done, okay? This is where the rubber hits the road. You're going to be talking to guys like Scott. There's going to be brokers there. This is where deals are going to get done, and you're going to be able to grow your business. There's going to be motivation there, but it's going to be a lot more than that. So I'm ready to go, man. You want to do some push-ups, or are we just getting off this thing?
Let's talk about how we structured it, right? It's all the live event is structured on the buy right, the manage right, and the finance right. And it's not fluff. It's not upsells. What we're doing is we're bringing guys who are going to teach you how to underwrite a deal. We have our management team there who's going to teach you how to manage these properties. And the finance right portion is going to be talking about agency debt, community banking, alternative investments like self-directed IRAs. Like Scott said, that's one tool in the toolbox. That's why it's comprehensive. It's going to take control of the whole entire multifamily investment. It's not just about buying the asset. Where are you going to find the money and how you're going to manage it? So, that's one key component. That's why I wanted to have Scott on, talk about self-directed IRAs, get people excited about them and saying, okay, let me take it to the next level. How do I start? And I think it's important for people to start now. If you're going to start raising money for your deal and you're looking for a deal, before you start looking for deals, let's start opening up an account. Let's start looking professional. Get that landing page going. So when you do have people and you're making those soft commitments and you start calling people up, you have somewhere to direct them and you have the education, because people are going to want to do business with other people they can trust, like, and add value to. So if you can bring that pain to somebody and say, hey, listen, have you ever heard of self-directed IRAs? And you don't have to be the master. You can push them to Scott or Scott's website and educate them. They're going to trust you more. So time to get ready, Mr. Stenziano. Time to buckle up, as you would say, right?
Let's do it. Let's do it.
All right.
Guys, thank you so much.
Thanks, guys.
Thanks, guys.
See you.
We trust that you enjoyed the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.